Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So the agenda today, we'll go through the market update, do a quick overview of the earnings, and then, excuse me, Joe's going to go through his ETFs. So just on a side note, earnings has come to pretty much an end. So we're planning for release of the next plan right around the 14th of June. So something to look forward to there. All right, let's get started. So, slight change here. We had, Russell, I think that was last week. Russell went into 7. Hasn't been a good 7 so far, but the other ones have still remained in state 1. The NASDAQ and the SPX. Green pie wise, obviously shrunk a little bit from 42 to 37. Still not technically oversold. That would be below 30. So, still kind of in the range of nothingness. Hard to put an actual name, range bound, kind of back and forth. So let's take a look at the market pulse. So this is bullish, bearish. You see, last week we're right around 42, kind of dropped down here, 37. So far the low and this move down was 36.49. So we're kind of right around there. Most of the time these kind of go sideways and then eventually turn up. I was kind of looking back through time and back here we had a few that this was back here. So we had, 2015 kind of went sideways up and down and then had a swoop. I don't remember exactly what happened here, but kind of same thing here. We had a swoop, but most of them kind of end up like this. It's kind of like chopping and then, cross. So just want to kind of show a little historical relevance here. Typically, once we make that low, usually it's kind of a turn up. But, I think really everything's kind of relying on, what's going on with the debt ceiling currently. We have a few days before, it's hard to say exactly how many days before default, but, obviously if they get something signed, which, looks like it'll happen, but, if we get something signed, we could get a bump up. If nothing happens, it's definitely going to be very bearish, and it could be like some of those where it goes sideways and then just drops off. So that's kind of where we're at overall. Nothing going on with the lows here, and pretty much showing the same type of thing here on the 200-day SMA. Just kind of range bound. So let's look at the bullish bearish states. I just pull it out a little here. So, last week we've had a little move up, bigger drop in the state ones, 2 going into 2, you can kind of see that. So 1s to 2s, and really nothing going on with 7s to 8s, or 5s are pretty much dead. So, it's kind of the same old story. And I have some charts to show you also I pulled off Twitter. We're just not seeing any market breadth. Like NVIDIA, obviously big move, dragged up a lot of the indices. And, not a lot of other stocks are participating. So that's kind of same story. And, I think it's really just going to be debt ceiling, whether, this turns up or not. Let's look at SPX here. So, we did touch our 4,200. You see here, we actually closed right above it. That was yesterday. Here we touched it, closed right on it. So 4205, 2 days in a row, right on the level, basically, our resistance level. This one obviously had a good pop, pulled well below, but ended up closing right on pretty much 4,200. So, same story until we can sustain a break above that 4,200. We're just at the very top of that range. Obviously, we're down a little bit today, so lower level is going to be our entry. So this was a good point here. Pretty much tested that entry level 4105, and we talked about that. So that's obviously a nice little bullish sign. And then we run into 4,200 again. So something's going to have to break here between this 41, 4,200 for SPX. So obviously a nice bullish sign to get a bounce off of that support level, 4105. And that coincided basically right with our 50-day. We've been saying keep an eye on that 50-day. So that's obviously a very bullish sign for SPX, even though we're not getting a lot of breath, for it to be showing support on this 50-day. You can see, let's kind of annotate here real quick. We had basically 1, 2, 3 bounces off that 50-day. So, obviously keep your eye on that. This is a good indicator of bullish markets if, that 50-day provides support. Right now, it's pretty much 41.10, and our entry price 4105. So right in the same area. So kind of the same stories last week. That's our low end, and then 42, obviously, that's a low end near term. Obviously, long term is 38. That's the range, but to the upside, 4,200, and keep showing that over and over. One of these days, we will break out above or below. I think if we get a debt ceiling deal kind of go through, well, I think we'll definitely pop above there. Get a little run. Not sure how long it'll last, but we'll have to wait and see on that. So obviously, if we don't, things going to get ugly. So that is SPX, pull to Russell. So obviously a bad state 7 so far. Entered at 1795. Did bounce off the stops here. You can see the low 1741. So just right below that stop loss 1, and really jumped off of that, which is a nice bullish sign. Obviously, we have to get above our entry price here, 1795, and then kind of upwards from there. Here's the range, 17 to 19, which we've been in a long time. Long term, that 17 has been really great support. And, this, bullish sign. We got a nice bounce off that stop loss, 1745. Let's see where we're at currently. So we're below that. So we're back down into the stops. So we'll have to see, if we can bounce out of there. But critically, 1700. And obviously not been a good state 7. We're just not getting any follow through with the breath. It's just, a few symbols really dragging the market up. So, if we start seeing some breath, obviously we can see, some good market movement. But until then, we're kind of the same story here. So 17, 19. There's been a few breaks, but that 17's been real strong. So even here, little breaks and pop up, a lot of support, and this kind of the initial one here. And this was the last one here. And that was May 4th, so almost a month ago. So, just going forward, 1700 bottom side, keep your eye on that. We can sustain a break below that. I think it, could get ugly. But, really it's all kind of all eyes on this debt negotiation. Okay, let's pull up our Fed tracker. So a lot of movement here. A month ago we had 23% for a hike. Now we got 70% as of today, looking for a hike at the next meeting. So, and it looks like, between these 2 months, they're looking at possibly one hike. This one hike is kind of, the last week is 30%. So pretty much flip flop overall. And, this is kind of the going trend we've seen since we've been tracking this for a while. These numbers have all, from 2 months ago, they've all just kind of been pushed up higher, to the higher and higher rates. I think at one point we had like 3 cuts, and that might have been a couple months ago, in December, and we said that was a big dislocation. So you can see now, December's kind of in between. That would be a cut from our current and a drop, holding from our current level, but now that they're pricing things in for June, between June and July to have a hike, this would be 2 cuts, because this would be our new level, 525 within the next few months if that happens. So, pricing in 1 to 2 by December, but of course the Fed still says no cuts this year. And well, we had a good conversation about that last week, how, earnings are pretty much not in line with, what the market's saying rate wise. For them to cut rates, something would have to happen. And, right now all the earnings are, for Q3, 4 are showing pretty robust. So that's our current dislocation. But, this is definitely tracked higher. From 3 cuts, it was kind of in this level, that 425 to 45, so it's moved up at least like 2 from when we had initially talked about that. So a couple weeks out, this will coincide with the new earnings plan. So all right, balance sheet, not much action. At least they reported it. So just a small, 20 billion that they're continuing. This is the last time we ran into the banking crisis, mini crisis, where we dropped a few banks. So that's about $1 billion away from there, 100 billion away from there. So I expect this to continue, and it's overall tightening and raising rates is net negative to the economy. So they're still trying to contract, and that's where we are currently. Let me pull up a couple of quick things. This is NASDAQ breadth. So this is like advanced decliners and basically the leadership. And it's just like you can see typically pretty much in line, but it's just, since I guess that's like mid-January, everything really kind of broke down as far as, the breadth, and that's continuing. And, we brought it up over and over. So, for us to get bullish overall, we got to start seeing some breadth, more participation. Okay, this is another kind of quick chart. So this was from, Joe asked me where it came from. He's one of the big houses. I forget which one, but they didn't put their name on it. So, but basically this is showing declining units for most categories in recent quarters. And this is just showing year-over-year growth by categories. So you can see, during the pandemic, a lot of home improvement type stuff, people are stuck at home, groceries up, and pretty much flipped kind of here, second, third quarter. That's when our, inflation, transitory stuff came. And since then, it's been a bloodbath for a lot of things overall. Year over year declines by units, but also prices have gone up, so that's part of the deal. But I think also the consumers are hurting quite a bit overall, from inflation. So the unit percentage increase are pretty significant. So just a couple of food for thoughts there. All right, that was it on the market. I'll open up to questions, comments. Anybody? Usually get at least one. Feel free, unmute yourself, questions, comments. If none, then I'll just do a quick earnings drop here.
Josh, Dan here. Can you hear me?
Yeah. Hey, Dan.
Sorry, I just got some new speakers. I was trying to talk. I had a bad setting. Yeah, what's your feeling on this debt ceiling, on how it'll affect the market? If I can't believe that it's not going to pass. It's just, is it going to be the same old, as, where they're just going to pass trillions of dollars, or we're going to have a real holdout this time?
I mean, honestly, we've been through this so many times, it's hard to believe that it wouldn't be the same old story,
Yeah.
I think they'd have to, be a little crazy not to, increase the debt ceiling. So, it's possible, but I would say it's unlikely right now,
Yeah, they changed it from June 1st. I guess now it's June 6th.
Mm-hmm.
But I remember what in the past, but it's never seemed to be this tumultuous between the parties, So
yeah, it's just kind of a circus, in my opinion.
it is. Yeah, absolutely.
And not sure anything meaningful. Even if they balk on raising the debt ceiling, it's hard to think that something meaningful cut-wise would come out of there. It'll just get so much pressure, from market and people screaming that they're like, okay, we'll just pass it,
Yeah.
So I don't think this is the place to the hill to die on. My opinion.
Yeah.
But that's just my opinion. I don't know. Anyone else have thoughts on that? Any insights?
I got a couple thoughts.
Mhm.
I think the market expects that it'll pass, and I think it'll be so on the news, and then if it doesn't pass, the market will really go down. So I'm looking for a correction in the market in the short term, in either instance, pass or not pass.
Okay.
Yeah, I agree with you, Joe. I think there's going to be a correction right around the corner here, especially with if you're watching the AI stocks, they're just crazy the valuations that they're getting on those already.
Which one, Stan? I didn't hear you.
The AI stocks,
Oh,
NVIDIA
okay,
and,
yes.
and company.
Yes. Yep.
Yep.
Yeah, I'll go through, a few charts a little later just to kind of show you where I'm coming from, with
Yeah.
that.
Cool. Thank you.
Yeah, thanks, Dan. Good comments. Question. Okay, anyone else? All right, let me pull up real quick. This earnings, I mean, there's not much left. There's only a few open trades. Okay, so we know bullish pre-runners, that one ended up down. Let's do kind of a quick, so we're slightly up. We only had one trade on the bearish pre-runners. We're still getting the same kind of thing with the pre-runners, with the confirmed dates. Bullish runners, we're down a couple hundred, which ended up better. We were down quite a bit more. The bearish runners, there's one open there, but we're up a little bit here, so that's helping overall. We still got one going there that should close out soon, time-wise. Vol raise is down a little. This hadn't been a good earnings. Last Q1 wasn't good either. So, this one down. So really it's just the bearish helping prop it up, but it seems to me that I think we'll probably end up, negative on this quarter. I think the bullish pre-runners, we're down. Yeah, we're going to be, we're down like $1,000 on that one. So, it's not going to be a good earnings quarter. Hopefully, Q2 turns around. Last Q1 for last year was bad. And then, the other ones we were getting like 95% win rates on the bullish pre-runners and stuff. So, hopefully that repeats, but overall, it's not hasn't been a good earnings. So, any questions on that? So we will put out that plan in a couple weeks. I know Sudhir had asked about the daily trades. So I'm in the process of going through year by year since 18 to show the results, going back to 2018 when we put these out. So, hopefully in the next few weeks, all those will be done. So that's what, I'm kind of working on the back end, just going through year by year every day and tracking all those trades from, the get-go. I started tracking them back in, I think it was 2021, on a daily basis, but, we had to, basically we want the data too, going back to when we put these out. So those will be coming out probably within a month. It's a very time intensive process. So, and I see your microphone's not working, Sudhir. So, okay. Yeah, you guys can always feel free to use the chat too. Okay, well, that's all I had. Any questions, comments we'll let Joe run it here? All right, Joe, you ready?
All right, Josh. Yeah, let's see. Let me grab that screen and hi, everybody. Just a few charts. So here's those bonds still for the most part in 8. Not a good sign. Part of the reason I think a correction may be coming is we're a little bit long in the tooth. We've had those ones in NDX and SPX for a heck of a long time, and I think we're on average 43 days. We're up at around 39. We'll go through that, but really, most importantly to me, and we talked about the retracement numbers last week, and I like to go to them when the markets start to get volatile and, you just kind of get a perspective. And lo and behold, yesterday, the NDX did get to its 5/8 retracement going back to those November 2021 highs. So, the entire move down retraced just beyond a 618 retracement. The number I think was 14.4. 14.450. We were talking about that last week. We were well below it, good 100 plus points below. Intraday yesterday, we got north of 14.5. And as we all know, Dan pointed out, whether it's the AI stocks, whether it's the Apples and the Googles, we had a monstrous run. Pretty good state one signal going back to, the middle of April. But that more than anything is why I think we're going to roll over here for a little bit of time. It's been a hell of a run, as Josh has been talking for weeks and weeks. It's been a non-breath run. And that one chart, the divergence between, NDX leadership versus the whole group. I mean, the divergence is darn near historical in its magnitude. So, NDX, as I say, got to that retracement. We're 43 days in, beyond the average of 39, ran well beyond. So I guess we talked about, banging up against level 3 last week, or rather target 3, exploded beyond that. And I just got to believe at a minimum, we're coming back to those target 3 levels. But we'll start to play retracements back down to the, to the downside. So that is NDX. The others, SPX, didn't get to any targets, kind of, basically going sideways, a little higher high than last week. And as we pointed out last week, in terms of the retracements between 50% and 5/8, there's a long way to go to a 5/8 retracement. I don't think we'll get it. I think we'll back and fill here. Same thing, little shy of days, maybe another week here. We haven't had the kind of average percentage run, which, I think speaks to that lack of breadth in the market as well. And then Russell, just laying around. Not much happened, as Josh said, kind of a meager state 7, 1700 has been a good support level. Still got a little ways to go to get there, but then it really was that 1641 level. So we've got cushion. I think if we break 1700, not maybe that big a deal. I think that 1641 is going to be the real test if we happen to break 1700. So, time will tell, but I think just the magnitude of the NDX run over the last over the last month or so is time or a reason for the market to pause and pull back here. In terms of, the ETF analysis, basically we were 3 bullish, 8 bearish last week. The same this week, only difference is the healthcare stocks rolled into 8 yesterday. There's the chart on healthcare. Healthcare, this thing typically, on average, at 8's just last 19 days, you get about a 4 or 5% downward move. So we'll see. It's already well off the interim, state 5 highs at $1.35, a month and a half ago. So, we'll see what happens. But that's kind of another reason why I think, we're in for a pullback. And we've got 6 of the 11 ETFs in state 8s, and basically with a long way to go in terms of time in those state 8s. So that's, kind of the rationale for why I think, we'll get a pullback here. And in terms of the healthcare, you basically got United Healthcare at 9%, J&J at 8.5%, Lilly at just over 6%, and Merck just under 5%. So, some real bellwethers. We'll see whether this state 8 turns out to be anything meaningful or not. Not a whole lot of time with 19 days, but that's the one that changed into a new state 8 versus last week. I'll pull up the rest of them again. You know, materials basically 9 days in, on average 33. You know, we're down at this 75 level. You know, you know, we had a, you know, kind of a double test at 75. We're close to that now. So I think, you know, that's something to keep an eye on, that 75 level and the materials, see what happens there. Plenty of time still left. Energy, 6 of 32 days on average. You know, we're down just under 2%, but the average move here is down 10%. So again, if state modeling is going to be good for us here, it's part of the reason I think a pullback is probably coming. XLF has just been sideways, you know, not much to talk about. Again, though, we're talking some real bellwethers with Berkshire at 13%, JP Morgan at 9%, Visa at 8%, and MasterCard at 7% in terms of the composition of that thing. But just sideways, 20 days in, on average, you get 29 days. So, you know, I don't think that's going to be leadership to the downside. I think some of the others might be more so. Oh, XLF also, you know, if you look at XLF, you could be talking about a triangle formation here, you know, going back to those March, April lows versus that stage 7 top at the end of April. So if you got to break out of that triangle, that may also help us in terms of direction of the market. One other point about XLF. Real estate, you know, dull and duller. Not much going on there. I mean, on average, we're close to time in terms of the percentage move. We're close to time. You know, we're at 11 days versus 13. You know, basically, we've met the average move down at almost 4%. So don't think we'll get any excitement there. And then I guess the last one I have are the utilities. And 9 days in, on average 19. You know, we're down, I think, about 3%. On average, you get about 6%. So, you know, we talked about this, I think, over the last couple of weeks with those bond indices, you know, going into stage 6 and especially stage 8 over the last few weeks. Not a surprise to see the utilities to the downside as well. So they were the charts. And then just, you know, we talk about FactSet, Refinitiv, you know, fairly regularly around earnings. Oh, one other thing about, you know, the market rolling over here. The earnings are out. And so I don't think, you know, there's news there. And the earnings out, I'll come back to some of the things. But, you know, 78%, I think this is a number that we kind of talked about also over the last few weeks. But now, with all the earnings out, 78% exceeded. That whole bugaboo about, okay, they exceeded, how much of a revised downward number, but 78% was still quite high. That good news is out. Again, another reason why I think, you know, we may pull back here. But a few other things here, you know, it's 290 to 500 companies referenced inflation in their conference calls. According to FactSet, the consumer discretionaries, you know, led in terms of highest earnings growth. Not a surprise if you go out and try to buy anything. I mean, you know, some of the coffee I just bought, you know, went from a $5.99 a bag to $7.99 a bag, you know, in the last couple of weeks. It just, the percentage increases on this stuff just kind of blows me away, and it's still happening. Guidance, 81 of the S&P 500 companies provided negative earnings per share guidance for Q1, the highest number since Q3 in 2019. I thought that was a little bit interesting. And then, you know, how much earnings were down 2.2%, the second quarter year-over-year decrease, which we've talked about. So I guess that defines an earnings recession. But just a couple facts that coming out of FactSet. Again, you can sign up for this stuff. They send out updates, you know, kind of once or twice a week on different ideas. So happy to take any questions, any conversation. If not, turn it back to Josh, who is busting his chops, going through those daily trade numbers. That is a lot of, you know, mind-numbing work. So thanks for continuing to work on that, Josh.
Sure. Yeah, it's a cool little graphic you got there.
Well, as long as somebody else does it, I can show it.
Yeah, yeah. That's good information. Nice and,
Yeah, I think the facts of
Re-
Refinitiv, they put out fabulous, in my opinion, just fabulous, free information.
mhm. Okay. Does anyone have questions, comments for Joe or myself before we wrap it up here? All right, well, we'll close it up. Thank you all, and we'll see you next week.
Everybody.
Thank you.